Good afternoon, everybody. Welcome to this latest webinar from the London Institute of Banking and Finance. My name is Chris Ray. I'm a director here at LIBF, and I'm really delighted to be introducing this webinar on thematic bonds. This is part of a programme of insights that's being delivered from our Centre for Sustainable Finance, which we established relatively recently to provide educational programmes, research and advisory on the challenges and opportunities presented to the finance sector in delivering environmental and social sustainability. If you'd like to know more about LIBF or indeed about the Centre for Sustainable Finance, please visit our website, libf.ac.uk. Before we start, I have to do a bit of housekeeping. The first thing is to say that if you experience any technical issues, you can see a troubleshooting box in the top right-hand corner of your screen, which gives you directions about how to deal with some of the most common technical problems. And the other thing to say is that we are recording the whole webinar, and we'll be providing a link to that recording to all the attendees after the event. So please don't worry, if you do drop out, you will still be able to see the whole thing. Everyone is muted, other than the presenters, of course. So please comment and ask questions via the chat box, which is also at the bottom right of the screen. Please do ask as many questions as you can, and we will try and answer as many as we can in the time that we have available. And it would be really good if you can use the chat box to introduce yourselves as well and let us know where you're joining us from. That's it really from me. My last job is to introduce you to our presenter, Chris McHugh. Chris is a director of the Centre for Sustainable Finance and is a faculty member at the LIBF, lecturing on derivatives and risk. He's a visiting lecturer as well at the Judge Business School, Cambridge University, a PhD researcher at the University of Southampton, and also a senior advisor to the International Association of Portfolio Managers, where he works with development banks on active risk management strategies. He has over 20 years experience in derivative markets and investment banking, including 14 years at HSBC, and prior to that at Credit Suisse, Deutsche Bank, and at Merrill Lynch. So that's it from me, and I'll be back later for the Q&A. Now for now, I shall hand you over to Chris. Chris, over to you.
Great, thank you very much. Welcome everybody, and thank you for joining us. As Chris said, the Centre for Sustainable Finance, we have an agenda, an objective to try and produce ideas, research, and information that's a practical use to people that work in financial markets or people that have to practice sustainable finance. So as I go through the webinar today, the spirit of this is very much to aim for the practical, to talk about some of the contemporary issues. And as Chris said, we'll save Q&A for the end, but please do put the questions in the chat and we'll pick them up as we go along if they are directly relevant to where we've got to in the discussion. There are a few polls along the way, so we'll have a few early on in the webinar just to get a little bit of a sense of who you all are, because I think there's quite a diverse audience today, and it'll be useful to learn a bit about ourselves. And then there's a couple more polls later on as well, where I'm very interested to get your views on a couple of topical matters. The title of the webinar is Where Next? And in order to do that, I will need to just try and figure out where we are today as well. So just a bit like a weather forecast, you turn on the weather forecast first, they tell you what happened today, then they'll tell you what happens tomorrow. So we'll do something similar. And other than that, I would like to dive straight in. So we'll just move first to slide 2 and show you that thematic bonds are in the news. So this is a news headline from June 30th. Not from too long ago. Rise in COVID-19 bond issuance fans fears over social washing. It sounds very dramatic. And what it has underneath is a chart. And the chart shows you bond issuance that's taken place over the past 5 years. And it shows you what proportion the sort of the tall dark blue box has gone into green bonds. We'll talk about those, define those later. Social bonds, sustainability bonds, and then an other. And I think the key thing to note from the chart is first, issuance volumes have increased, but you see a sudden drop in the first half of this year for green bonds. And part of that is due to the COVID crisis itself. Companies have focused mainly on preserving liquidity and making sure that they have access to cash. So the processes we're going to talk about for thematic bonds became too cumbersome and companies had to move more quickly. And so that's one of the explanations for why it has dropped off in 2020, it's an exceptional event, but there's clear demand for some sort of thematic investment. So we do need to put a couple of definitions on what do we mean by these thematic bonds. And broadly, they fall into two categories. There are green social sustainability bonds, and as the language says here, the proceeds from the bond are exclusively applied to some sort of project that is clearly identified. So an example of that could be a company that intends to build a solar plant, issues a bond, and it actually says directly, I intend to use the proceeds of this bond to build a solar plant. And then the investor has a clear line of sight from the bond that they buy through to where the money should flow to. The second category is a little bit different, sustainability linked bonds. This is something that's a little newer, and what it is a bond where the terms of the bond, so maybe the coupon or the interest rate payments that the borrower has to pay, they vary or can change depending on the company meeting certain performance indicators. So there will be some metrics, and I'll give you an example, could be, say it's a company that consumes electricity that is derived from coal as part of one of its inputs. The company may commit to changing the mix of the inputs so that it relies completely on renewable energy. And if the company achieves that goal, it will then pay a lower rate of interest. So you can start to make a link. The first example, the top bonds, are specific projects. The second category of sustainability linked bonds is about the operations of a company as a whole. So it's not project specific, it's more about the journey that that company is taking from where it is today to where it would like to be in the future. So those are the two broad categories. What has happened over time is that the market for these thematic investments has grown up around market participants themselves. So principles of what these instruments, these financial instruments, should look like and how they should work have been broadly agreed on in a sense and written down. So when companies issue, they can say, well, we do conform to the principles of bond issuance for thematic bonds. Now, one of the catches in this market is that there's not a single set of guidance and principles that everybody in the world agrees on, but for the purposes of today, we'll focus on perhaps the most best known, which are those from ICMA, the International Capital Markets Association. And you could go to their website and you can download the principles for each of these three categories of bonds and look and see. It's very well written, it's quite short, and it explains exactly what a bond issuer should be doing. The four things that they must do really to adhere to the principles: they must clearly identify the use of proceeds, so what the project would be. They must, it's written down, the project evaluation selection must be clear. Management of proceeds must be explicit, and what that means is if you issue a bond and you receive, for example, $100 million from the bond issue, it should be in a ring-fenced account, and it should be clear where the money goes inside the organization. And there also needs to be a form of reporting so the company can explain how well it's doing and that the money has been deployed as anticipated. So this is the process that one needs to follow. And actually for sustainability bonds, it's relatively similar. Similar kind of process, just there must be some clear sustainability targets to follow. But it's the same kind of idea as clear characteristics and some sort of reporting and some sort of validation. So there's a control around the bonds. Now, before we go any further, I would like to just launch a few polls so that we can get a sense of where you feel you are. So I've just given you a definition. So we just have the first poll up, please. And this poll just says, how familiar do you feel you are with thematic bonds? So I've given you a rough definition of how I would group the world. So if you could please vote, and we'll get a sense of the sort of the grounding of knowledge we have in the audience today, which is useful for you, but it's also useful for me, so I understand how to nuance some of the things that we do. Okay, So looking across that, I mean, we've got continuing votes coming in. It appears that, there's some familiarity, but most of you have come here for sort of an introduction and understanding what these instruments are and how they work. So that's very helpful. Okay, I think we can end that poll, please. And if we could move to the second poll, so it's a similar kind of question. What I would like to know is how familiar you are with the concept of ESG. So that is environmental, social, and governance. So slightly different, similar, but a slightly different pattern here. I think across the respondents, we have a slightly better familiarity with ESG as a concept. So thank you. Let's end that poll, please. And final question, which I think will be useful, we'll bring the third one across, is just to get a sense of which industries you work in. Right, so we have a pretty clear majority in banking, I think, or close to majority in banking, some in the advisory space and some students. No regulators, or one regulator, and one person from asset management. Okay, thank you. Right, I'm going to ask you other questions as we go through. A couple more I've got for you, but that's just useful to get a background for who's on. So we've discussed the shape of the bonds and roughly how they're defined. How do we track these proceeds? There's various things that can be done in order to demonstrate that you conform to what you've said you're going to do. There are second-party reviewers. You can get yourself certified. Somebody would come in and check what you're doing and basically validate what you have done. There's also a process of sort of bond scoring and rating, which the rating agencies might do. And again, all of this is about the company demonstrating that it's conforming to the principles that it said it would do. Now, how does the money flow around the system? This slide shows the relationship between investors, banks, and borrowers. And what we have is a group of investors. Investors could buy green bonds or regular bonds. So thematic bonds is green bonds is just a special case of thematic bonds. And that could be issued by a bank, or it could be issued by a company. But the story's a little more interesting than that, because actually, even if you buy a green bond from a bank, the bank itself is then committing to make sure that that funds get allocated into green activity. So between banks and corporations, you have green loans. In other words, money is lent conditional upon certain types of business activity. So even if you were buying green bonds that are issued by a bank, the funds themselves can flow through to companies in the form of loans. Or a larger company may choose to actually borrow the money directly in the capital markets and commit to certain projects, in which case you can actually buy a green bond that's issued by, for example, Iberdrola in Spain is a big issuer of green bonds, and they will commit to put that proceeds into, for example, renewable energy projects. So there's a flow around the system that does run through the banking system. And what's the process? Well, this is an example of a balance sheet, if you like, of a company. On the left-hand side, we have perhaps the capital structure today. They have a certain amount of equity and a certain quantity of bonds that have been issued. And let's imagine that this company comes across a useful project and it says, well, look, I think I've identified projects for another 20 million that I can identify as green, and I would like to borrow money to finance those projects. So once the company has identified the projects they believe that they can create in the green space, they will then go to the capital markets and issue a green bond. So here we have a new bond that's been issued. They've borrowed 20 million. And the company has said, we will invest the proceeds of that into these green projects. An absolutely critical point to understand about green bonds or thematic bonds. The bond issuance itself inspires the projects. So the investors buy because the projects have been identified. The use of proceeds is critical. We've got this point here. But the projects don't belong to the bond itself. What has happened is the company has made a promise to commit the funds to 20 into these projects financed by the bond issuance. So the diagram, the way I've drawn it, actually is quite misleading. The projects belong to all of the owners of the capital. So what I'm going to show you is from a corporate finance perspective, what has happened is this. The projects themselves actually are shared across all the bondholders and equity holders. So the green bond is a form of capital issuance, but what has happened is the company has committed to invest the money in these green projects, but the benefit of that goes to everybody. It doesn't just go to the green bond holders. So it's really quite a critical point to understand. It's not as if the green bond holders can say that those are my projects. The projects belong to everybody. And that's something very important to understand about thematic bonds. Now, why would anyone do this? So there are a variety of reasons. There are benefits for private sector issuers. There's access to funding. In other words, different investors buy green bonds than regular bonds. There's potential for a slight discount on the interest rate. So maybe you can borrow at a slightly lower rate. You have a new, different investor base. So investors who buy green bonds have different, potentially completely different fund managers or different companies. And they tend to buy the green bonds and hold them as opposed to trading them. There's a signaling benefit. And what the research suggests is that for companies who issue green bonds, there is a potential for a slight improvement in their share price and also a potential improvement in their cost of funding. Now, that doesn't mean the green bond causes that, but the act of issuing the green bond and showing that you're able to identify sustainable projects and that you're able to manage those has positive characteristics, which appears to be taken positively by the financial markets. And it's not all good news, though, unfortunately. There are some disadvantages and constraints to actually maintain the green bond and to monitor and make sure that the money flows where it needs to go. Requires infrastructure and cost and people and IT in order to make sure everything's there. And also there is a risk of lack of suitable projects. So if you're identifying green projects, if you, on the one hand you have solar plants, that's great because that's very clear. But if you're not quite sure what the projects are going to be, that could be slightly awkward even if you have the best intentions. So there are some difficulties for private investors, private companies to issue, but there are some clear potential benefits. Why would an investor buy a green bond? You've got to look at both sides. It's a controlled investment. So if you have certain investment strategies or certain needs of how your money is invested, you can control the way that the money flows. There are, for a given issuer, alternative financial instruments to transact. So one of the key things that's happening in Europe is that many companies are shifting away from only using bank loans and moving a bit more towards borrowing money through the bond market. So that the United States has always been a long way ahead of Europe in that regard. Europe is moving in that direction. Bank loans are private between the bank and the company, but if there are more bonds tradable, then actually there's more ways to invest in a particular company. The third point is important. The point of the thematic bond is that it gives bond buyers the ability to direct or somehow control the way that the issuer's business operates. So it's this idea that the bond issuance itself is sort of forcing or encouraging the issuer to decide how the money will be invested and which kind of projects will be there. Why would they do it? Again, they might be tempted by the lower cost of funding. But for an investor, it's an opportunity to affect the behavior of the issuing company. There are other open questions that I think we may get in the Q&A, but they're quite complex from a market's perspective, is whether the bonds, you can buy and sell them easily. There's something that people will come across in the newspapers, words such as greenwashing, social washing that we saw on that first slide. What that really means is that the company is not really doing anything new and is just claiming to do certain new activities in order to issue the bond. So that's one of the issues that is quite often in the press. And then there is a question of whether there really is a pricing benefit, which I do want to come on to. Before we do that, I would like to just do the fourth poll. So if you could please move that across. And this is about pricing, really. And it's the question of whether sustainable finance, if you are investing or involved in sustainable finance, does it mean that you are sacrificing some sort of economic return in order to create some sort of social benefit? So this is the idea that somehow you should pay for the privilege of making sure the money goes in the right direction. So we'll just allow the numbers to come in here. And I think this is quite a nuanced question. And there are disagreements about what the sort of the truth is here. I'm going to suggest to you the following, that a lot of people, when they think about sustainable finance, some of the words that are used are responsible investing, impact investing, everything that sort of implies, or ethical investing. And the words are quite loaded in some ways, because some of it implies that somehow there's something apart from the financial return that should be taken into account. And that's true in certain situations. So sustainable finance, I think, as becoming mainstream in the financial markets, is such that the returns from allocating money to firms that have a good grasp of the environmental, social, and governance issues tends to be well run and potentially could outperform a portfolio which is a conventional portfolio with no focus on how the companies are run. So I'm not going to sort of, I suppose I would be in the disagree camp. I think you can have sustainable finance without sacrificing the economic returns, but I think it depends on your personal definition of what sustainable finance means. And most of the time, if I have a meeting with an organization, that's the first conversation we have, is what do you mean by sustainable finance? And just, I think, thank you for the poll. I think we can move that now. What I define it as, or what we've defined it as at the center, is the United Nations Sustainable Development Goals and the Paris Agreement. And that way it's quite clear what we define as sustainable finance. Within that, we feel that things like terms such as impact investing or ethical investing are special cases to be discussed. But you have to be quite clear about the nature of the investment strategy that you're looking at. Okay, so pricing. I do want to just have a look at a couple. I'm mindful of time, but I think I'm on a reasonable pace. What I have done, maybe a little bit small, but I think you'll get the idea. I looked at the bonds that have been issued by the European Investment Bank. And every little dot on this graph represents a bond that's been issued. And on the horizontal axis are the maturity dates of the bonds. On the vertical axis is the yield for those particular bonds. And if you're familiar with your curves financial markets, you'll immediately see that there is some kind of a shape to the yields at which these bonds trade. And I've marked with red crosses the green bonds that have been issued by the EIB. And I am looking at it, you can see that there is, it's difficult to say conclusively there's a saving or not, but actually there is some sort of consistency of pricing. And based on what we discussed about this corporate finance point about the bondholders not owning the green assets, this makes complete sense. From a pricing perspective, you would expect the green bonds to more or less fall on the same yield curve as the conventional bonds. So actually, explicitly, the green bonds don't really trade at a premium or a discount to the other bonds. They trade very, very similarly. There may be some small differences, but largely speaking, there's some consistency. To give you another example, I've picked on a Spanish company called Iberdrola, which is a big issuer of green bonds. And similarly, I've pulled some of their bonds. Now they have fewer. And then you have to start, when you analyze these markets, be a little bit careful at what you're looking at. You can see there's 3 circles that are up, sort of seem to be floating towards the middle of the chart. I will just highlight one of them with my arrow. The reason I've put these as little circles, and I'm going to ignore them, is because these are very, very small bond issues of under 50 million euros. And therefore, the pricing of these is highly unreliable, and it would be potentially wrong to include them in the analysis. Bonds of size, you can see again, we have this curve. I have blue circles and green triangles. The green triangles clearly are the green bonds. And looking at this, it seems to suggest that maybe the green bond, for example, look at this one, maybe it is a bit cheaper than some of the conventional bonds. However, as usual, this is not quite the complete story. What we need to think about is the bid-offer spreads, where you can buy and sell the bonds. And if I layer those on top, you can then start to see this envelope. And this is the range, really, that the prices sit in. And when you start to think about the bid-offer spreads and the friction of transacting different types of financial trades, it's not quite as conclusive that the green bond here, for example, is clearly cheaper than the others, because within this envelope, there's a margin of error which makes things slightly unconclusive. So there are some wrinkles of what make it slightly hard to analyze these markets. Another big headline that appeared in the last week is a Spanish bank, BBVA, issued, again, you can see the headline, BBVA breaks ground by issuing risky green debt. Sounds bad. So they issued €1 billion of what is a financial instrument called a COCO, or a contingent collateral bond. And it's part of the reforms from the financial crisis that you can now issue different types of securities. And there was the question raised of what on earth is this bank doing? Right? We think about bonds in the conventional sense. You borrow money and you know where the proceeds go. But when you start to issue capital instruments, that gets a little bit complicated. Now, I know not everybody has a capital markets background, but I will show you what that means in practice with my similar kind of balance sheet graph. In the previous example, we showed money in, money out. I borrowed 20 million. I had 20 million of projects. The way that a capital instrument works, so bank capital, has a multiplier. So the whole structure of a bank balance sheet works that you have capital and you can make significant loans on top of it. So the controversy with this particular instrument is that the instrument has been issued. If you issue well, in this case, €1 billion, but say 4 units of capital, in the traditional bond market, it supports 4 million of projects. But if you issue a capital instrument, you could theoretically support multiples of that, because capital allows you to have a huge loan portfolio against it, subject to capital rules. This is quite interesting. So I actually interpret this BBVA issuance as hugely positive. So if we start to think about thematic bonds and making sure that money is deployed in interesting ways, by doing something like this, they're no longer constrained to 4 units in, 4 units out. By issuing these types of securities, they can significantly increase the money that's available for green projects. So while the headlines seem dramatic in the newspapers, I think we can be slightly more optimistic and be quite actually happy that some of these things happen. And bringing it out into the open creates a case for discussion, which I think is very positive. Last couple of slides, and then we can move on to questions. A question: does the issuer matter? Does it matter who is issuing the bond? So I've put a list of the types of entities that will issue thematic bonds. Development banks, such as, for example, the IFC, the International Finance Corporation, part of the World Bank, or the Inter-American Development Bank, or the European Bank for Reconstruction and Development, These institutions started the thematic bond market in the first place. So why do they issue? Who are they signaling to and why? Arguably, these institutions are owned by the sovereign states. By the act of doing this, they are showing the way for financial markets participants of how funds could be invested and the types of structures that can work. They're also able to demonstrate that the money is being applied in ways that are consistent with the Sustainable Development Goals. Private sector banks issue. We've had many examples of commercial banks issuing green bonds. This is part of the, I think it's becoming a need in the markets for banks to demonstrate they are lending towards sustainable projects, that they have a greening of their balance sheets as well. So private sector banks have a vested interest in doing this. And for those of you that are more familiar with developments that are coming, the reporting standards, the disclosure standards, and the sort of financial accounting standards are all moving towards a world where banks are going to have to start to demonstrate how they are deploying cash. So for private sector banks, I think it's a natural extension of what they already do. Corporates we've discussed. Corporates are issuers of thematic bonds. There are some arguments that even if it doesn't necessarily decrease your cost of funding significantly, what it can do is open up a new investor base for you. And as I said, the evidence suggests at the moment that there is a slight issuance premium for issuing a green bond if you have the ability to develop the infrastructure. The last category I think is interesting and is not without controversy is whether sovereign states should issue green bonds. So what does it mean when a government issues a green bond, ring fences the money, and commits to certain projects? And one of the arguments that has been taking place in the UK is that some parts of the government say we should have a green bond, other parts say that we shouldn't. It's not necessary to ring fence funds. I'm just clocking the questions, but I will come back to those as we go through. So for government, it's a little bit less clear. But before I go on to sort of wrap up and bring all these different ideas together, I would just like to put one last poll up, if I may. And this is poll number 5. And what I would like to see is to what extent you believe that markets and financial institutions can figure out how to make this work, or whether you believe actually that governments and politicians need to make this work. So the statement says markets alone cannot provide all the solutions. The responsibility lies with governments and politicians. So if you agree, you're basically saying governments and politicians should be creating the right environment for this to work, and it can't all be left to financial institutions. And I don't think I need a statistics degree to tell you that there's a strong agreement, I would say, on average across the participants, which I think is interesting. I mean, it does chime with my view, but we will have a look at the last slide in a moment. So I think we can end that poll, please. So sovereigns, okay. I want to just bring all these things together. They've thrown quite a lot of ideas at you. First of all, without me wanting to invent it, what I did decide was, before I tell you what I think makes an efficient capital market, I at least should base it on some evidence. So I went to the Bank for International Settlements and pulled out their document on what makes for a developed capital market or an established capital market. And these are the sorts of things that are seen to be standards. So the legal framework, disclosure, transparency, regulation. Financial market infrastructure means the ability to transact and trade the instruments, and internationalization to the extent you can create cross-border business. All of these things financial institutions could do something about, but I would suggest that you do need governments, politicians, and regulators to create the ground rules in order to make the market function. So if we expect thematic bonds to grow and thrive, these elements need to fall into place. So to conclude the where next, what I want to do is sort of bring all these ideas together. And these are my sort of key thoughts. The issuer matters more than the bond. And this is this point that I hopefully have got across to you, is although the bond buyers, the investors, inspire the projects, or they inspire the flow of funds on the asset side of the balance sheet, at the end of the day, the instrument itself is just part of the capital structure. So there might be some slight pricing benefits, but it's about the behavior of the issuer rather than the bond itself. So although we talk about thematic bonds, what we're really talking about is, what does the company do? There's work underway that needs to be completed on all of these issues: valuation, disclosures, risk management, and there's something in place for everything already that's just not done yet. So valuation, you have sustainability accounting standards that are still being written. We have disclosures certainly for banks, under the TCFD, the Task Force for Climate-Related Financial Disclosures. And risk management, we're beginning to see the EU taxonomy and stress tests being created to give some standardization. Regulation is still evolving. I think really it's only a matter of time before it becomes prudential. And for those of you that are familiar with that, that just means potentially more capital required against not green, could be coming. The governments can hugely affect the outcomes, because actually the forward-looking policies and the ways that governments decide how to do things will be critical for companies to direct their investments and for investors to understand how to deploy their money. And this whole completed framework, I believe, in the long run, argues for sustainability targets rather than thematic bonds. So I'm a huge fan of thematic bonds. They have a great role, but actually, for me, the long-term solution will be more sustainability-linked instruments, where we're, instead of looking at particular bonds and particular projects, we're looking at the company as a whole. We're looking at the way in which that company organizes itself and what kind of trajectory it's on for the future. So maybe that argues more towards sort of the sort of, I don't want to say ratings, external independent ratings that rank companies according to their ESG targets or their performance and their sustainability goals. So in summary, thematic bonds, extremely useful. They are growing enormously. They're full of controversy. They do some very good things, but always, in my view, they're not quite enough. We need something more. We need the governments and politicians to step in. And we probably, in my mind, need to move towards a more ratings-based, holistic ratings-based structure based on the issuers themselves. So on that note, I think I will stop talking. I think I've been through my slides. I shall get off my soapbox, and I think we should start to address some of the questions that have come in. So, Chris, I don't know how you want to organize this from a order. How should we do that?
Well, let me first of all say thank you very much for a really interesting and insightful introduction to the world of thematic bonds. I'm one of the people who answered the poll saying that I only know a little bit about them, so I found that really, really helpful. And it's good to understand where you think this is going to be going next. We have got some great questions coming in. So just to say to everybody, if you have a question, please do use the chat box to ask that, and we will try to get to as many as we can. I wanted to start with a question of my own, if I may, and then we'll move on to some of the questions from the audience. And I right at the start, you talked about the impact of COVID-19 on the market for thematic bonds, and it seemed to be you were talking about a very short-term impact. What's happening right now? Do you have a view of what a longer-term impact might be? When will the market recover? When will it recover? And is there a long-term impact on the market of thematic bonds of something like COVID-19?
Yeah, so I think, it came on us very quickly, as I think we all know, in sort of, depending on where we are in the world, but really over sort of February, March. And the particular point was the scramble for liquidity. So companies needing to make sure they had the cash flow necessary to survive for 3-4 months or however long it was going to be. governments have stepped up and put a lot of money on the table everywhere to provide that liquidity and keep banks available to give lines and to support their local economies. So even if we are living with this for a long period of time, I think provided companies have stability and they know where their liquidity is going to come from, then we won't see the same rush to go out and borrow money and get cash in the door. The second element, though, is again, if you might see this in the newspapers, there's a big push for on governments to try to identify when they spend money. The sort of building back better is the phrase that is being used, that the deployment of government money will flow towards sustainable projects. And maybe that what we'll do is actually reinvigorate the market and actually give companies more incentives to try to identify the projects that are worth chasing. And so governments can steer potentially, this is the whole idea, the governments can create the framework to make the investment incentive work.
You talked about governments a lot and the impact that governments have on the success or failure or profile of sort of thematic bonds and sustainable investments. And you did mention that there was a debate going on about whether the UK should issue a green bond, but you didn't give your own opinion about what you thought of that debate. So I was wondering if you had a view about whether this is something that UK government should be thinking about.
Yeah, I do, and I have to say I changed my mind a couple of times on this. My current view is I think the UK should issue a green bond. Now, just to give some numbers to put it in perspective, the UK national debt is somewhere of the order of about £2 trillion. Typical green bonds issued by sovereigns could be $1 billion, $2 billion, etc. So even if the UK issued a green bond of $5 billion, it's nothing in the general scheme of the UK national debt. So the idea that that money would be somehow ring-fenced and cause problems for the Treasury, I think, is probably overstated. But there are some very good reasons for the UK government to do it. And I'll give two that I think are quite compelling. First is a bit technical, but the idea is there is a lot of UK pension fund money that is looking for long-dated assets, and there aren't many green bonds out there in sterling for investors to buy. So if the UK creates some volume in green bonds with a certain sort of long maturity, that might encourage other issuers to do the same, and pension fund money might flow in that direction. So it could be a catalyst for more investment, and it's a way to mobilize private resources. The second, which I think is potentially political, but I think is quite powerful, if the government issues a green bond and it says we intend to make these proceeds work, it forces people to look. It forces companies and banks and investors to say, well, actually, what are those projects? Where's the money going to flow? I think it has huge signaling value for the UK government to do that. I mean, in particular, because we've signed up for the net zero 2050, as have other countries, I think it shows intent. And I think that would be a very important signal to send now.
Thanks very much indeed. That's really interesting. Let's go to some of the questions from the audience now, if we may. First question that was asked, we'll get to that one first, was whether you have any comments on the impact bonds or results-based form of social impact investing.
Okay, so I'm going to take that. This is the sort of the sustainability linked type bonds, where we're not looking at particular projects, but we're looking at the metrics, where we have companies that have performance indicators. So there are two ways in which this happens. It does happen there are some examples in the public market of, let's call them sustainability or performance linked loans and bonds. And I think that they can be controversial because a couple of companies have been accused of putting up goals that are too easy to hit, or putting up goals where they've already accomplished 90% of the requirements, so it's not a stretch. But the idea that they're getting done, it creates the structures. And I'd rather see them get done and then tightened up and improved than nobody do them at all. The second thing I think is, again, important to realize that although there's the public markets we've been talking about, there's a huge amount of investment in the private credit markets. So when we start thinking about project finance and asset managers investing directly into businesses, whether it's private debt or private equity, a lot of that investment does actually come with sustainability and performance targets. So conditional lending is a very big sector. I think it's just thematic bonds is just a different way to access that in the public markets. And I think that it is, so it's very established. People understand how it works, but our problem at the moment is lack of standardization.
Okay, great, thank you. The next question was about the level of seniority of green bonds, and whether that level of seniority is equivalent to ordinary bonds that are issued by the same issuer.
So we think back to my corporate finance slide. Green bonds are generally pari passu and the same seniority as conventional bonds. They have they're not generally. They do not have security. They're just like regular bonds. So if the company were to default, you stand in the same place in the queue as all the other senior creditors, whether they're banks, whether they're bondholders. Interestingly, you do have some, again, it's in the green bond space specifically, subordinated bonds. So actually for some companies, and the first time I saw this, I did raise my eyebrow. For some companies, all of their senior debt is conventional. They have subordinated green debt. So actually the green bond holders are at the back of the queue if the company defaults. And this is again, we keep coming back to this corporate finance point, is the bonds do not own the projects, they inspire them. And as long as you're comfortable with that, then all of this starts to make some sense.
Fantastic, thank you. There's a really interesting question about thematic bonds in developing countries and whether you've got any data or information about the extent to which bonds are either being issued by, within, or focused on developing nations.
Yes, and actually, in a funny way, that is that ties very closely back to the world of development finance. And actually, there are don't have them in my presentation. There are examples of a company called AC Energy in the Philippines. It has a green bond program on the Singapore stock market. It issues green bonds, and it can clearly identify that they're going into solar projects anywhere in Asia, for example. That's a very easy way of doing it. And actually, for the green bond issuance process, the reason that actually is quite clean is because the company, because it is a project-based industry, it can clearly identify where the money's flowing. I think it's a little harder, actually, maybe sometimes in the developed market space, where it's not so much projects, but it's sort of general green activity. But there are plenty of examples of sort of conditional and applied thematic finance in developing markets.
Brilliant. And thinking about sustainability targets, we talked about sustainability targets quite a bit in your presentation. And someone's asked a question about whether, again, the government has a role in investing in green bonds to try and make sure sustainability targets are met from a country basis. Is that something that you envisage happening?
Well, it's sort of, it is definitely on the table. The European Union is looking at potentially including green bonds and other assets as part of its bond buying program. There, I feel I have mixed feelings. I mean, sort of, is that the right way for the government to support the shift in finance? I'm less confident that that's necessarily the best way of doing things. I think if I could wave a wand, I'd rather see carbon pricing sorted out. So if you price, I guess maybe I'm sort of, it shows my markets background. If it's in the price, people know what to do. So actually, if you price pollution correctly, or if you price social harm correctly, the markets will adjust. And I feel that governments buying green assets isn't necessarily, particularly in a world of QE, is not necessarily the optimal way to go.
There's a question about the returns and losses from green projects and the extent to which they affect returns for other bond equity holders. Can you sort of talk about how that impacts real?
Yeah, so it's very important to green projects aren't necessarily less risky than conventional projects. They're just different technologies. And actually, a lot of the new technologies are untested and unclear. So just because a project is green doesn't mean it's less risky. But remember, all of these things belong on one company's balance sheet. So I'm going to keep dragging you back to this idea that it's the company's activities as a whole that matter. So if a company chooses to take on risky green projects and safe conventional projects, as an investor, that's what you buy into. There is evidence, again, from research that, particularly in something like mortgage lending, if you are mortgage lending, if you're lending secured against properties that are have passed certain environmental standards or energy efficiencies, the research seems to suggest that those actually do have lower probabilities of default. Now, that doesn't mean it's got anything to do with the property being energy efficient. It could just mean people that buy energy efficient homes are more likely to repay their mortgages. But there seems to be some sort of valid link between those two. So it's both sides. They could be more risky, they could be less risky, but you really have to drill down and look at the specific case to identify what's going on.
I mean, that may link into the subject of ratings. There's a few questions in the chat about the rating of thematic bonds, and I think there's sort of two angles to this. If I've read it correctly, one is the extent to which thematic bonds are rated in the same way that other instruments are by the rating agencies, but also whether there is scope or should be scope for specific ratings for thematic bonds that are using different metrics to rate them in terms of their impact and their sustainability credentials and all that sort of stuff. So there's probably two questions.
No, absolutely. No, it makes sense. So the conventional ratings where we talk about probability of default, so AA, AAA, single B, whatever it happens to be, that is exactly the same for green bonds as for conventional bonds. And any two bonds from the same issuing entity with the same seniority will have the same, they must have the same credit rating. So should be no difference in the rating just because it's green. If it's the same seniority, same issuer, job done. What is different now is that there are a broad range of ratings. There's the different rating scales looking at companies and scoring them on their E, their S, and their G, the environmental, social, and governance. And that is actually very broadly used in the investment world to identify potentially problematic companies. So potentially, almost as an investment filter, you make a judgment on maybe how well a company is run and how well it's in control of its operations. And that may be the decision that actually says buy, sell. Now, those rating systems are different. They are, again, they're not homogeneous. They're different systems. We haven't got a single agreed system. Clearly, the conventional rating agencies are seeing how they can build that as part of their business. But there are some standalone rating agencies that are working as well. I actually think that's the right way to go, because if you come back to this idea, it's the issuer that matters, the company that matters. Disclosure, reporting, measurement of what they actually do is probably the bigger way to do things rather than these sort of bespoke one-off bonds.
Another question is, I think you talked a little bit about the advantages and disadvantages for issuers of the thematic bonds compared to conventional funding. But it seems very nuanced, and I guess the question is, what makes it difficult to determine the benefit of thematic bonds for issuers, and why is that difficult there?
So, in order to make a fair comparison of two bonds for an issuer, if you really wanted to measure the difference between a green bond and a conventional bond, you need the same issuer, the same maturity bond, the same currency, the same coupon, the same notional amount, and the same issue date. You need two identical instruments, and there aren't any. No company issues two bonds like that on the same day. So what happens is you may have two bonds issued on the same day, one green, one not green, but one's 5 years and one's 10 years. So you got other things that create problems. So the difficulty is you don't have matching pairs of bonds, so you can't perform that analysis very neatly. The other thing is, again, this is not new. So without getting too much into capital markets discussions, large corporations, what happens is the debt capital markets team in a bank will arrive with a pricing grid, and they'll say to the company, you can issue 3, 5, 7, 10-year bonds in dollars, euros, and sterling. These are all the prices you'll pay, and they'll all be different. So actually the borrowing rates in different currencies on the same day can vary by little amounts. The point with the thematic bonds, and again in particular the green bonds, is that you're tapping into potentially different pools of capital. You may be able to save 5 to 10 basis points on your funding cost on the day for the instrument you decide to issue, but you don't have a like-for-like comparison. But again, this is normal in capital markets. It's just a different instrument that is showing us the same problem.
Thanks, Chris. I think we're pretty much out of time, and we seem to have answered nearly all the questions that have been asked. There may be a few that we've missed, and what we'll do is try and provide written answers to those questions in the follow-up to the webinar. So I really just wanted to say thank you again, Chris, for a really interesting session, which I found very, very informative. I've learned a lot from it, and some really interesting questions from the audience as well. To say thanks to everybody for joining us today from all over the world. It looks like we've had a really, really, really international, broad audience. So that's it from us. Thanks so much for coming along. We will follow up, as I said, with a link to the full seminar, to the webinar, a video of that, responses to any further questions as well. And again, if you'd want to know any more about the work we're doing in sustainable finance, please do go to our website, libf.ac.uk. For now, thanks a lot for coming, and we hope you can join us again for another session really soon.
Thank you.
A lot. Cheers. Bye.